everybody, Matthew Cole with United Wholesale Lending here in Sacramento. Today wanted to kind of go over some process and procedural tips on what you should really do when you are looking to buy a home. There's steps that can set you up for a win. There's steps that can set you up for some major confusion. There's some steps that can start you off in the wrong part of the process to where you end up hurting yourself really bad. So what I want to talk about today is, from A to Z, not A to X to B to C to 14. I want to go through the process of A through Z, the proper way to do this, and it works in your benefit 100%. So let's jump into that and see what we can do here. First step that I would talk about is always sitting down with a loan consultant first. You're going to be online. You're going to be looking at all these different homes. How do you even know what you want to pay? How do you even know what you can afford? You're going to be scamming through the internet. You got to stay off the internet. It's always fun to look at homes. It's always exciting. But what happens the most time is that you start falling in love with houses that you may not be able to get approved for, yet alone may not even want to be able to have a payment for. So what I typically would say to a buyer is, let's sit down and let's talk about what's important. First thing I always ask most people, what are you comfortable with as a payment? Typically that answer is a lot less than what they're looking at on the internet. So what I say to them is I say, let's do an application, which is the most important part of the process. If your loan, or if you've ever heard of a loan getting declined, 90% of the reason is because that loan application wasn't done properly. It wasn't done thoroughly. So what I always say is, let's sit down, let's do an application. It's going to talk about your employment for 2 years or more. It's going to talk about the type of income you make. It's going to talk about the money you have saved. We're going to take a look at your credit score. It's going to ask if you have any child support, bankruptcies, foreclosures, you owe any IRS tax debt. It's going to ask a lot of those questions so that when we go through this process up front, my team and I know how to try to lay out the blueprint of how we're going to set this up. So what I want to do is I want to put together a process on how to get the pre-approval done. My recommendation always, no matter how you are, no matter anything, is really getting with a loan officer, finding out what you're comfortable with as a payment. Because if you get yourself into a home that you're not going to be comfortable with, you're going to be a statistic of people who are losing their homes, and we don't ever want to see that. So once we get all your income documentation, your assets, all the documents we would need based on the application, I would send that over to my assistant and my team, and what they do is they're going to analyze everything. They're going to analyze your income. They're going to maybe get a full verification of employment from your employer, where it breaks down your base, your hourly, your overtime, your commission, your bonus, any kind of pay structure that isn't like if you're not a state employee where your income is the same exact every month no matter what. There's different types of income people get. They get 1099, which would lead to being self-employed. They get a W-2, which is a wage earner. Being a W-2, they might have overtime, they might have some commission, they might have some bonus. Different types of pay that would need to be calculated accordingly per each guideline for Fannie Mae, Freddie Mac, or FHA or VA, whatever loan program you're doing there. We would have a specific guideline on how to calculate those incomes. Assets, same thing. Is it coming from a gift? Is it your money? Are you pulling from a 401k? Do you have things you're trying to sell? I always want to know that up front, because once it's done, and then it's hard to undo. So our goal is to sit with you up front and make sure that when we're meeting with you, we're like your attorney. You tell us everything. We are going to help you guide yourself through all the right process to make sure you don't have any hiccups, with any of this. All right, so congratulations, the loan's pre-approved. We got that part all finished up. We got your income, we got your assets, we got your application, we got everything we need to be able to tell you what you could buy. So that's usually the toughest part, is getting that out of the way. So now that you know what you can afford, now we talk about what you want your payment at. So if you want your payment at $2,400, we have to base that payment on, homes that are $2,400 payment type homes. Putting a ton of money down doesn't always help. I would assume every $10,000 you apply towards your mortgage, it's going to save you $60-ish a month. So would you rather have 10 grand in your pocket, or would you rather have $60 a month savings? Me on the other hand, I'd rather have 10 grand. Extra $60, I'll just cut some things out of my life that can make up for that difference. So when you're out looking at homes, that would be the next step. That your next step would be then, hey, I'm now fully pre-approved. I now know what I want my payment at, and I now know what I qualify for. Now a realtor is going to be chomping for your business. They're going to be like, I want to work with you. You've done all of the work up front. So now I know what I can find you for a home. So now you get to go out and look at houses, and that's the fun part. Obviously the competition steps in on writing offers, but this is where it gets exciting, and being able to finally go out and look at homes you can buy. So choosing a realtor, and choosing a realtor is going to be somebody who's, they could be young, old, new, whatever. Just somebody who's going to give you attention, someone who's going to work really hard for you, somebody who's going to negotiate on your behalf, somebody who's just extremely ethical. I have tons of realtors that I work with, some of the best human beings I know. I work with realtors that are like me, always doing the right thing, extremely ethical, looking out for my client's best interest, because it's not about the money we make. It's about the end product, man, the smile on the face. That's my favorite part, is when I get to see them online and their social media, tagging pictures of their homes, moving their kids in, their pets, their dogs. All that fun stuff to me is always the best. So that's for me, that's what my end product is being able to see that. So now you're out looking at homes with your realtor, and you guys find one. This is the one. We want this house. Writing an offer. Writing an offer is going to be the contract that you're going to write up and send that to the seller. That's going to be your initial, here's what I would like to present you for your home. So there's tons of different ways on presenting offers, whether you go in low, whether you go in above. That's where you really, really need to trust your real estate agent at that point. They're going to be the ones that are going to tell you, look, this house has been listed on the market for 6 months. We don't need to write an extremely high offer on this house. We could probably write it for 10 grand below, 20 grand below, 5 grand below. We could probably have them pay your closing costs. There's been no activity on this house. Not 100% of the time, but I would say your chances are pretty good at that point. Now, you find a house that's been listed on day one on the market, the chances of you trying to undercut that home and get that deal done is going to be slim to none. You're going to have to come in, bootstrapped, lunch packed, and write an offer on that house. You're probably going to typically write it over asking for the most part, or at least at asking, because you're going to have what's called multiple offers for the most part. And in this market, most of the homes have multiple offers, which means you're not the only one that wants that house, unfortunately. So what's going to happen is you're going to write an offer. Joe Schmo's going to write an offer. Cindy Lou's going to write an offer. Now you got 3 people writing an offer. So what's going to happen is, more than likely, you're going to get what's called a counter offer. And on that counter offer, it's going to come back and it's going to say, we want your best offer above and beyond what you wrote. You can keep it the same or you can improve it. So this is your opportunity to either keep it as is or up your price, up your terms, up your, shorten your loan contingencies and things like that, which is the money you're going to put on the line as your skin in the game in sense, to where when you write the offer, you write a check for 1%, 2%, whatever that might be. That check will get taken from an escrow company, will get cashed, so it'll leave your bank account and will be held in an account, which is kind of your initial skin in the game, what we call it. So at that point, there's some mutual money based on, if you accept my offer, this is the money I'm going to place in as a deposit, to where if I stay in contract, I will eventually release that as my deposit to you. If you want to back out of the home prior to your contingencies, which are for your loan, your inspections, your appraisal, different things like that, that money's still yours. It's never gone or never forfeited until you release your deposit contingencies to the seller, which at that point, once your contingencies are removed, your money is it's in the air at that point. You still might be able to get it back. It just depends, but not every time you do. So just know that when you write a deposit, it's not the end of the world. That money, it could be anything, man. It could be 20 grand, 5 grand, 2 grand, $5. It could be whatever you want to put in there. Just know that once it's in there, it's still yours until you remove your deposit, you remove all your contingencies. And at that point, that money is considered kind of up in the air at that point. So once you're in your inspection contingencies, these are the time frames you have to do your home inspection, your pest inspection, your roof inspection, your well, your septic, pool, any kind of inspections you think that are going to be necessary for that house. This is your time to get those done. Usually that is done within the first 10 days of contract. And that's when we're ordering the appraisal, which, by the way, I pay for all my buyers' appraisals right out of the gate. You don't ever get charged for an appraisal, which is typically about $500-ish bucks. So just my contribution to helping you as a home buyer or as a realtor who has a buyer who's short on funds, helping you, get this process done. It's very expensive in a sense to buy a home before you're even buying the home. with the inspection costs and the appraisal. So what we do there is we help out with paying that for you up front. So the first 10 days is usually what's being held for your inspections, your appraisal, and things like that. Once you get your inspections and you review everything and you like how it looks, that's when you say, okay, we're good with the inspections. Let's release that contingency. Next one that's usually up is going to be your appraisal. So once we get the appraisal, we make sure that the value is there. We make sure that there's no repairs that are being required by the appraiser that would be, you know, detrimental to the offer. Like the seller, hey, you need a whole new roof on this house. It's completely trashed. You know, things like that. Hey, the pool has a leak. Things like that that they may see or call out. They're not going to dig deep, but they're going to go off of what they could see by the naked eye. Next contingency at that point would be your loan, which is the big one. If your loan gets bad, it's just because there was a mistake made on your application, or there was something that the loan officer was never told. I would say most of the mistakes are made always on the application not being done properly. You know, there's tons of horror stories that I hear, and I'm sure you all have too, based on we got to the end and our loan got declined. You know, at this point, we do our best as loan officers. I know on my team, we don't have mistakes. We don't ever make mistakes. I'm pretty confident when I say that. We do so much of the work up front. We do not ever want to have any kind of issues like that at closing. But you know, the loan contingency usually lasts about we try to knock ours down to about 14 days for the most part. But you know, a contract is like 17 to 21. So we try to keep ours a little shorter just because it helps getting your offer accepted. Now, once we go through the loan underwriting process, the loan gets approved. The underwriter may or may not have any questions based on, you know, hey, we need an additional pay stub, or hey, we need a letter of explanation based on your income being this or whatever. There's always something sometimes the underwriter wants. Good thing with us is that our conditions are always super limited on what's needed. Usually it's some escrow information and some, you know, letters of explanation of something. So super simple stuff. That's when I'm going to say, hey, based on this approval or based on where we're at in this process, you are free to now remove your loan contingencies. That's usually your last safe point of when you put your deposit up for grabs. At that point, if you release your inspections, your appraisal, and your loan, that deposit now becomes seller option money at that point. So we always want to make sure that when we're releasing these deposits, you are 100% ready to go and buy this house. If you found anything on there that you didn't like, maybe you hung out there during the nighttime and, you know, seeing things you didn't like, you can always back out. You could back out 100% all the way up until the time of your contingencies. Once you could back out after your contingencies. You're just probably going to kiss that deposit goodbye. So at that point, we got our contingencies released. We are now moving into the closing stages. So that's when you're going to start getting some more loan paperwork. It's going to start talking. It's going to be buttoning up the numbers a little bit more, fine-tuning your closing costs, fine-tuning your payment. If anything's changed, maybe some things have changed throughout the process where you lowered your rate or you locked in your rate or something like that. So that's basically where that point is going to keep a little more concrete. We're going to get into closing, and we're going to work on the closing documents, which are going to be your deed of trust, your note, your final closing disclosure, which are going to basically make this deal real. You will meet at the escrow company, or you can have a mobile notary come to you and sign, but that's when all of your paperwork is going to be signed. The real deal Holyfield stuff, your note, the deed of trust, which gets recorded with the county. You know, a lot of it's the same stuff you've already signed throughout the process, but for the most part, there's a couple that are brand new that are very important. So once you sign those papers, that's when the lender is going to fund the loan, and that's when the escrow company is going to release it to the county to record. At that point, once it's recorded, that is your property. You are keys in your hand, ready to rock and roll. So congratulations at that point, you're now a homeowner. If you have any questions at all about this process, again, it's super simple to buy. To buy a house. The competition's tough, but most people that struggle buying a home is because they do not go through the steps right. They start off at C, they go to B, they go to Z, they come back to A. Let's do the steps right, because that's what's going to help you be in a better position to succeed. It gives you a better opportunity to improve your credit, to improve your income if you're self-employed. We can show you how that works. There's so many different options and benefits that you get from sitting down with a loan officer from the very get-go beginning before you do anything. Number one, I always recommend, sit with a loan officer. someone who's good. You know, my team and I we're in the top 1% of the country. We're usually in the top 5 of the state of California for purchases. We are somebody who I would say would give you good information, who would set you up for the best win possible. So again, congratulations. You kind of went through the steps of what it takes to really kind of get into contract, how to get pre-approved. You know, give me a call. I can walk you through a little more of the fine tuning of things, but look forward to hearing from you.